Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, May 21st, 2009. We begin with fundamental data from Britain. UK retail sales rose 0.9% in April, the second straight month that sales were up, and the figure beat expectations. Also, March's sales were revised up to show a 1.1% increase compared to the originally reported 0.3%. The report adds evidence that the UK recession may be easing as consumer spending starts to rebound. UK business investment, on the other hand, fell 5.5% in the first quarter, preliminary data showed. That was a sharp contraction that outpaced the 1.5% fall in the fourth quarter. On the year, investment was down 6.8%, and both numbers came in below expectations. The data shows the strains that UK firms are under, with manufacturing particularly hard hit. In a third release from the UK, the government posted a budget deficit of £8.5 billion in April, the most for that month since records began in 1993. The government's coffers are being depleted by falling tax revenue and increased spending. The recession has weakened economic activity, especially in the financial and housing sectors, which has contributed to a 9.5% drop in tax receipts, while programs underway in order to dampen the impact of the recession increased government spending by 5.4%. Also today, the Standard & Poor's rating services signaled that the country may lose its top credit rating as they changed its outlook for the country's economy from stable to negative. The main concern is that the UK debt approaches 100% of GDP, and its finances, as evident by today's report, have deteriorated. That news sent the pound reeling in the European session, with the pair sliding almost 300 pips from an overnight high near 1.58 to test the 1.5520 level. However, the better UK retail sales data and worries over the greenback allowed the pound to claw back its losses and actually set a new intraday high at the 1.5890 area. Similar price action was evident in the euro-pound pair, which surged 140 pips in favor of the euro following the Standard & Poor news, but then that jump was cut down during the next several hours. The pair found support at the 0.8750 level, so the pound was not able to reclaim all of its losses. Europe's preliminary reports on manufacturing and services activity continued to show contraction, but the pace of that contraction was the slowest in 8 months. The manufacturing PMI climbed to 40.5 for the May period from 36.8 in April. The services sector also contracted at a slower pace in May as its PMI rose to 44.7. The euro-dollar pair continued to climb today, bouncing up off the 1.3730 level in the New York morning session. The euro rose 180 pips to set a high near 1.3925. It's interesting to note that European equities and U.S. equities were down rather sharply today, indicating risk aversion. Risk aversion has favored greenback's strength since the financial crisis started last year, but today's data showed a break from that pattern. It seems that worries over inflation in the U.S. are finally catching up to the dollar and have pressured it to a new 4-month low against the euro. The number of U.S. workers filing new claims for unemployment benefits fell 12,000 to a seasonally adjusted 631,000. The previous week's figure was also revised down to show a higher number of claims. The total number of people with continuing claims, in other words, those workers collecting benefits for more than 1 week in the week ending May 9th, rose by 75,000 to 6.66 million. In 2 other releases from the U.S., the Philly Fed Manufacturing Index continued to show weakness in May, improving only slightly to negative 22.6 from last month's negative 24.4. Although the indexes for general activity, shipments, and employment improved, the index for new orders declined slightly. A second release, which was more positive, showed the Conference Board Leading Index climbing 1% in April. The indicator measures the outlook for the economy over the next 3 to 6 months. The dollar-yen pair rose overnight, hitting a high near 95.25, but then proceeded to slide to the 94 level. Today's bout of risk aversion favored the yen, the third day that it has gained against the dollar. Gold prices rallied to a 2-month high, a sign that investors are concerned about inflation, as well as ongoing plans for more treasury purchases and the worst-case scenario of a credit downgrade to the U.S. following the threat of one to Britain. That means investors are fleeing the dollar and U.S. assets in anticipation of such news, and we'll have to see how this new sentiment continues to develop. Tonight, the Bank of Japan will conclude an interest rate meeting, though they're expected to hold rates steady. Overnight, the UK will release a second version of its first quarter GDP, along with its index of services. Tomorrow, there's only one important release, Canadian retail sales. And that wraps up today's broadcast. Thank you for joining us here at cmsfx.com, and happy trading.